Pakistan's banking sector's balance sheet today is mere reflection of what the economy has done for the last 2 decades or so. So at the moment, once again, we are under an IMF program. If you look at the last 2 decades, in 2008, we had an IMF program. 2013, again, an IMF program. 2019, again, an IMF program. 2022, a mini IMF program. And as we speak, we are under an IMF program, and our first review or second review has gone very well. And we will get about $1 billion for that. Now, that shows that economy of Pakistan has not performed well over the last 2 decades or so. It's not just a recent phenomenon, because every 3 or 4 years or 5 years, we've gone back to IMF. The impact of that is that the growth rate is very, very low in Pakistan. When you have an IMF program, typically what happens, brakes are applied, try to achieve stabilization. And in that, we cut back a lot of things. The growth is deliberately stopped. One of the reasons is that Pakistan's demand for credit has been low. It's very easy to say that Pakistan's advances to deposit ratio is abysmally low, 40% or so. In 2008, by the way, it was 75%. But after that, there was a gradual decline. For a long time, it was 50 or 55% because the growth rates were not there. And when the growth rates are not there, and interest rates go up, because every time there's an IMF program, the interest rates is jacked up. The demand for credit goes, the bankers become hesitant, as they should. And as a result of that, the Pakistan's balance sheet, overall, it looks very good, banking sector. There's no problem of liquidity, no problem of capital adequacy, no serious problem of the quality of risk assets on the books. But there's hardly any lending. For the last 3 to 4 years, we've had slowest GDP growth rates in the entire history of Pakistan. And at this point in time, we have done very well on stabilizing the economy. We are out of the danger of an imminent default, but the economy is not picking up. If you look at the large scale manufacturing, not a good performance. Inflation has come down, sir. Our exports are static. That's one of the biggest problems that we are facing. The remittances have done, mashallah, very well. Last year was $38 billion. There's no reason why we can't do the same this year. In fact, maybe 5 to 10% increase also. But the exports are static. One of the main problems of Pakistan, the lack of foreign currency, which can sustain long-term growth, is still not possible. There is a huge foreign currency debt. There is a huge local currency debt. And to show how much there is a local currency debt, in 2008, about 23-24% of government of Pakistan's requirement to fill the budget deficit was taken from banks' balance sheet. Last year, December 31st, 2020, 86% of that need came from Pakistani balance sheet. The good news is the banks are liquid, but it's going to the government, right? 86%. And as a result, and this is a reflection, we must understand what the Pakistan's balance sheet shows, Pakistan's banking balance sheet is a reflection of the economic structure at this point in time, or the lack of economic activity that shows there. The investment portfolio last year was around 29 trillion. The loan book was half of that. It should be the other way around, in fact, more than that. And people say that the advances deposit ratio of India and Bangladesh is about 75%, we are at 40%. There's a reason for that. If you look at the average GDP growth rate of India in the last 2 decades, it's 6.4%. Pakistan is barely 3%, and it has to reflect that. So we are carrying a huge government portfolio. This 29 trillion, by the way, investment portfolio, a good 95% of the government security. Overall, the economy, we've stabilized. IMF and everybody else outside, the rating agencies are recognizing that, and they're giving us good ratings or improved ratings. But the economy is still not out of trouble. We are still not close to start talking about the growth, but at least there is a stability at the moment. In 2008, again, 17% of the total loan portfolio of the banking sector was to SME, right? Today it's about Last year it was around 4%. PBA and the banking sector decided last year to focus on some of the priority areas, and we realized that yes, our lending to agri, our lending to SME was woefully, very, very little. So we needed to play. The good news is there is some element that is showing. In 2024, the SME portfolio was 491 billion. This is June number I'm saying. June 2025, from 491 to 691. So that's 40% growth. Similarly, the agri exposure was 467 billion. And by June 2025, it is about 100 billion more. So that is something that we should feel good about it. Can we keep that momentum? In India, there is a ministry called Micro, Small and Medium. Ministry. So you can imagine the focus they have. And they have SMEs about 19%, and agri, I'm sure, is quite a lot. One thing that we need to start showing, we need to start talking about micro, small and medium. I don't know why we don't do that. So this 491 billion or 691 billion, I believe, does not include micro. So if you add micro to that 4% goes up. In 2023, the total agri lending of Pakistan was about 860 billion of the banking sector. The biggest single piece, I was honestly surprised, was microfinance, more than the large banks. The microfinance banks had 240 billion something, and the large banks were 220. So microfinance should be, this should be our mantra, micro, small and medium, not just SME, and we talk about micro. Now, admittedly, the microfinance industry is going through a certain process, and they've taken huge hits also. That does not mean that we stop having faith in microfinance. Pakistan apparently is the 7th or 8th most vulnerable country on climate changes. I mean, it is staggering. And if we don't do anything, the numbers say that we are going to lose about 20 or 30% of GDP. Now, here is a country which is struggling to reach $2,000 per capita income. Imagine if we lose 25 to 30% of GDP by 2050. So the challenge is there. State Bank is at the moment working on the rules of green taxonomy, right? This will provide a framework, and they will tell the banks what to do to develop this part. On PBA part, we are at the moment working with BII and State Bank. We are going to bring together to build a sustainability model and reporting framework for the entire banking industry from our part of it. So financial institutions, particularly the banking side and the capital market, stock exchange, has been pushed to do all this. The whole infrastructure of organized business is moving towards that. The good news is on solar. Pakistan is the largest importer of solar in the planet, apparently. And one of the reasons, by the way, this is where our ingenuity comes in. One of the reasons, because we have the most expensive electricity platform. So the answer to that, which turns out, by the way, there's a reduction in the demand for electricity. So that's another financial issue that the government faces, but there is a reduction. But from the climate point of view, great news. The reality is, as of 1st January 2028, we're supposed to convert the entire banking sector to these Sharia-compatible products and all that. It's just 2 years left, right? We have today 25% of the banking sector is Sharia-compliant, which is fantastic, by the way. And it started a little over 2 decades back. We need to really, really prepare us. It's a massive challenge. I don't think we'll be prepared in 2 years. We cannot disrupt a financial system based on achieving a target. It's not just converting the books to that or changing your legal documents. That's the easy part. How do you train? There are 150,000, 60,000 people working in the banking industry. It's not just the banking industry. There is insurance. There's mutual funds. It's a massive challenge.